Thank you very much. I appreciate being here today. I'm here with Lisa Smith, who's also a member of the Financial Quality Assurance Unit team at the Child Support Bureau. And we've got some Title 4D issues to talk about. It's a fairly full presentation, so I'll kind of get right to it. Just a little overview. We've got some news about ARRA incentive funds that I want to go over. Certainly. Is that better? Yes, no? Okay. Does it need to be even better? Okay. There we go. All right, and then we have, this will cause some reporting changes, or it will need to be reported on the QIB a certain way, so we're going to talk about the QIB and maybe do a little review on the quarterly incentive balance report. The guts of the presentation is going to talk about claiming for self-insured health insurance counties. It's been a big issue for us, and so we've got a new policy, a new plan for doing that I want to kind of roll out a little bit here. We've got a couple miscellaneous issues that we've run across over the course of our QA reviews that have concerns from county 4D offices that we want to bring up as well. And then if there's any time, or you can ask questions during the presentation, is fine as well, but we'll have time hopefully at the end for some Q&A. So right to it, ARRA incentive funds. We have received approval from the federal government to combine the ARRA incentive funds into the regular incentive funds. They no longer need to be tracked separately. Now the method of this transfer that we have talked with Lori about at Board of Accounts, obviously, is writing a check. It would be write a check from the amount of the ARRA incentive fund and just transfer that amount into the regular incentive fund. And that would be one level of documentation for this. Instead of doing it just within the software, you'd have the paper trail of a check. Second thing we'd like is you to complete an incentive transfer agreement form as well. Now there's only 18 prosecutors in the state, 26 clerks, and only 5 Title 4D incentive fund accounts that still have ARRA balances. So it's not a huge number out there. It's about $500,000 statewide. And so at CSB, we are going to at least partially help complete and manage this process. What we are going to do is we are going to start out filling out these transfer forms on your behalf. We will fill out the county name, the transferor and the transferee and the fund numbers, and then there's a little justification on the line on that transfer form, and we'll fill that out as well. And then we will email that to you. And then the county auditors, you guys will fill out the dollar amount, because the most recent dollar amount we have, based on the reviews that we do, is as of March 31st. So if some of that money has been spent subsequently, you're going to know about it, we won't. So you will fill out the dollar amount that needs to be transferred out of the ARRA funds into the respective regular incentive fund, the date of the transfer, obviously, and then you'll sign the form. Now, I don't know if some of you, there hasn't been a whole lot of transfer forms used or transfers done. There's been some. Normally, these transfer forms are signed by the transferor, say the clerk, the transferee, say the prosecutor, and then also by the auditor. But for this one transfer, the ARRA transfer, and closing out of those accounts, it will just be signed by the auditor. And here's just a copy of the form. You've probably seen it before. Not a whole lot has changed. We're waiting. We've gotten initial approval from Board of Accounts for this form. We're waiting on final approval. We just changed a little bit of language in the middle that talked about you're not able to commingle the funds and that sort of thing, because now you are able to commingle the funds. Yes?
Does the prosecutor have anything to say about this? Did they want it to go separate, or is it not?
This is happening.
All right.
Okay. Okay, so now when to zero out these funds? Wait until we get, where we have emailed you the partially completed transfer agreement form. Again, we're expecting any day the forms to be completed, so hopefully sometime in, once we get the approval for the form, it would be very quickly, within a week or so, that we could get them all completed and out to you guys. There's going to be in the body of the email, we'll go through the instruction process, what all you need to do, and all that sort of information. So just wait till that gets done, but we'd really like for this to all be done by the end of the year, by 12/31/18. The cash balances in all of the ARRA incentive funds statewide, we're hoping would be zero. So How does this affect the QIB? I'm sure you're all dying to know. The ARA transfer that we're talking about here is reported as a balance adjustment on the QIB. It's an auditor-initiated transaction, so the clerk or the prosecutor isn't going to report it. It's reported by the auditors. It would be a negative adjustment under the ARRA column and a positive balance adjustment in the corresponding regular incentive fund column. Now, we have, and we got a picture of the form here we'll go to in a second, but the second bullet point on here is just a little blurb. If you know that QIB form, and we'll show you the form here in a second, there's a comment section. There's a comment section where it asks for details about whatever the transfer is. And so this second bullet point here is the comment that we want in the comment section when you end up putting this transfer on the QIB. Per federal approval and CSB guidance, the county is transferring the remainder of its ARA funds into the corresponding regular incentive fund. So now this transaction is documented not only with the check writing and that paperwork, it's also going to be on the transaction or the transfer form, and then it's going to be commented on here on the QIB. So there's great documentation to cover this transaction. Lastly, when you get the partially completed transfer form, you can go ahead and at that point do the transfer. You don't have to email it. When you complete the transfer form, you don't have to email it back to us. Wait until you record that transfer on the QIB and then just upload it into the 4D expenditure portal at that time. That'd be the easiest for all concerned. That way we will get it at the time we're actually looking at those things and doing that review. And so that would be the easiest. In addition to the ledgers and the fund balance reports that you're already uploading into the portal when you do the QIB, when you do the QIB that includes this ARA transfer, then you just upload the transfer agreement at that point. And here's a copy of the QIB. You can see those big spaces in the middle. I'm talking about the comments box. The top one is for regular incentive funds. The bottom one is for ARRA. You don't have to put that blurb in both of them. Just put it in one, and that's fine. And the next is just a blown-up copy of it. You can see a little bit better where the balance adjustments are at the top and at the bottom. Just a little bit more review on the QIB. Continue to report the balances in all 6 incentive funds at least through the end of the year. We have a lot of updates that we're doing to the 4D expenditure portal, to its platform to help make sure it can continue to be supported and all that sort of thing. And that's limiting some of the other things that we'd like to do for the portal. So we'd eventually like to get rid of the ARRA section of the QIB form, and on the quarterly incentive expenditure form that clerks and prosecutors and courts do, there's an ARRA page. We'd like to get rid of that as well, but it's just a matter of timing and when we might be able to do that. So for the time being, continue to report the balances on your QIB for all 6 funds, at least through the end of the year, and then we'll give you an update as to that as that goes forward. One other thing changing for the QIB is the due date. To be consistent with other forms that we have, we're changing the due date for the QIB from the 20th of the month that it's due up to the 15th of the month that it's due. Our records, when we've been looking at into the portal and seeing when these things are submitted, a large majority of those are done by the 15th. Very few are done between the 15th and the 20th anyway. And so we're hoping it's not too much of a burden, but to be a little more consistent with other forms that we've got, that due date was changing. So the next QIB will be due on July 15th, not July 20th, and that would be for the April through June quarter, the second quarter. And again, continue to submit copies of your incentive ledgers and your fund balances to CSB. We greatly appreciate that you do that. That saves us a lot of work with a lot of the quarterly reviews that we do. Having those things already there with us is a very great time saver, and everyone's been doing a good job with that, so I just wanted to thank you very much for that as well. And those are just uploaded into the portal. All right, the last little bit about balance adjustments, just a review. Obviously, incentive fund transfers are considered a balance adjustment on the QIB. Other examples of balance adjustments are if you pay the cost allocation plan fee out of incentive funds, that would be a balance adjustment that would be reported on the QIB, because it's more often than not that's auditor initiated. That's not something the clerk or the prosecutor has done, so it needs to be on the QIB. And if the incentive funds, for example, are in a separate interest-bearing account all by themselves, and that interest is being put back into the fund, then you need to report that as a positive balance adjustment because that is increasing the balance of the incentive funds. Okay, on to health insurance, Title 40 health insurance. If you're a fully insured county, then we all know what that is. Everybody pays premiums, and then the county pays those premiums to an insurance company, and the insurance company pays claims. For Title 4D purposes, that's very easy to claim the expense because you know what it is. You know you have a rate sheet from the insurance. You know what the single and the family and the employee spouse, you know what those are each month. And so the prosecutor and the clerk and the courts would know how much to claim for health insurance as a reimbursement each month. Unfortunately, that's not the case when it's a self-insured county. It's very difficult for Title 4D purposes to figure out what the county paid portion is for individuals. It may be a great plan for the county. I hope it is. It saves a lot of money for the county. That's great. But for Title 4D purposes, it gives Lisa and I a headache. And so it's very difficult to try to figure out what the dollar amount is. The normal procedure for a county that's self-insured is they have a budgeted line item. They budget in the commissioner's line, and they budget in other funds for health insurance. And then they transfer these amounts periodically into a dedicated health insurance fund. And from there, from that fund, then the county pays claims and administrative fees to a third-party vendor and whatever. So the expenses are paid out of that claim or out of that fund. Now, normally for Title 4D, as a lot of you probably know, expenses are claimed once they're incurred. So you have to incur an expense, whether it's payroll, whether it's supplies. You have to actually incur the expense, and then you subsequently claim a reimbursement for Title 4D. That's how it works. Unfortunately, for self-insured health insurance, and we've had many meetings with Lori on this, we cannot look at the expenditures made out of that 4700 or 4701 or whatever it is, that health insurance fund, because now you're running into issues with HIPAA. You're starting to look at maybe seeing those costs and tying them to an individual, and that's just a non-starter. I mean, it's a non-starter for us, unfortunately. So the issue becomes, well, when are these expenses paid? Well, talking with Lori again, we've come up with, she really came up with, the method to use is the expenses are paid when they're transferred. And so you'll have a budget line item. Let's say you have budget line item in the general fund, and periodically through the year, amounts are transferred into a health insurance fund. Well, when those transfers occur is when it's considered paid for self-insured health insurance at this point. And so that creates some issues with the clerks and the prosecutors and the courts because in many cases, they don't know when those transfers occur. We're almost 2.5 years, we're almost done with our first initial cycle of our FQA reviews. By the end of the year, we'll be done with the first cycle. And we've talked with many of those 40 offices about this, and they just do not know when these transfers occur. And so that's one of these issues. And another issue is, all right, you've budgeted a certain amount per person in the budget line item, but you're not transferring that full amount. If you transferred the full amount, say in one lump sum in January, it might be easy or relatively easy to calculate what the dollar amount per person is. But if you're transferring amounts here and there, different amounts throughout the year, inconsistent periods of time, which a lot of counties do, that's going to be very difficult for people in the clerks and prosecutors' offices to be able to figure out what the dollar amount per person is. What even complicates it more is some counties budget for self-insured insurance using rates. So they'll have single and family and all that sort of thing. Now you're looking at trying to break those rates down based on smaller amounts that are transferred throughout the year. So it just really becomes a real problem to try for those offices to get a good number. And this is what's led to, unfortunately, a lot of large adjustments that we've run across during the course of our first 2.5 years of doing our FQA reviews. Many times the real reason for those adjustments, I mean, there's other issues that come up, but one of the large adjustment reasons is health insurance and self-insured counties. So we're trying to come up with, and we've worked for some time to come up with a method that avoids these huge adjustments, that avoids uncertainty as to what the dollar amount is that they should claim, and hopefully is pretty mechanical and easy for those offices to be able to use. And the new method is for the Title 4D offices, because here's another issue that's different. Not only are there all the issues that I talked about before, but not every county transfers money from the budget line item into a health insurance fund. There's a lot of counties that just pay from that budget line item. There's a lot of counties that pay a third-party vendor and then they pay the claims. And we even have some counties that do a little bit of all of them. So there's not a lot of consistency going on. So we were trying to come up with something that's consistent with every county, that every county does, and that is using the budgeted number. Every county budgets for the health insurance, and so that's a number that we can use. And so we look at the county-wide budgeted amount for health insurance, and this would not just be in the general fund, but health fund and highway and whatever else that you've got health insurance budgeted. You would divide that by the number of employees enrolled, which is employees, not employees in the family, just the employees enrolled, divided by 12 months, and that gets you a budgeted cost per enrolled employee per month. And then that would be what the clerk and the prosecutor and the courts would use for claiming for the upcoming year. They would use that amount, and obviously they'd have to multiply it by the 4D percentage of whatever the work percentage that person has. But they would use this method. It's clean. It's a number. There's no questioning about it. There's no going back and forth with the auditor or a vendor coming in saying, hey, we think it should be this number and that sort of thing. This is the number to be used, and it kind of avoids a lot of excess time wasted. Now, the only problem with using a budgeted number for Title 4D claiming, is that you have to reconcile it at the end of the year, because under federal regs, you have to use the actual amounts. The actual amounts are what you have to use. So if you claim a budgeted number, then at some point during the course of the year, you're going to have to reconcile that to the actual amount. And if you remember, a minute ago I said for self-insured health insurance, the actual amount is the transferred amount. It's the amount that's transferred from the budget line item into the health insurance fund. So we would do this calculation at the end of the year. You wouldn't have to know when the transfers occurred. You would just know the total amount of the transfers that occur. You would look at the county-wide transfer amount, again from all sources, divided by the number of employees enrolled, again, divided by 12, and that gets you the actual cost per month per enrolled employee. And you use this for reconciliation. Now, we have a spreadsheet that we've created that the clerks and the prosecutors and the courts will be able to use. It hopefully makes it very mechanical for them. It's very simple, and it will calculate any reconciliation adjustment that needs to be made. Now, the only reconciliation adjustment will be required only if the budgeted amount, the amount that you claimed, ends up being higher than the actual amount. If what you claimed was higher than what turned out to be actual, then you're overclaimed, then that does require a reconciliation. However, if your budget amount is equal to actual or less than actual, then you're underclaimed, and you don't have to do a reconciliation at that point. You can, you're leaving some money on the table there, so you can, and this spreadsheet will work both ways like that, so it'll determine what an adjustment should be. If you're overclaimed, it's going to be a negative adjustment on a future monthly expenditure claim. If you're underclaimed, it would be a positive adjustment on a future expenditure claim. So this is all about calculating of Title 4D expenses. I'm sure you're probably wondering, why am I telling you guys this? This should be something that I tell the clerks and the prosecutors. Well, unfortunately, we've come up with a form that you guys were hoping will fill out for us and for the clerks and the prosecutors. It's called the Auditor Health Insurance Form, which is a real innovative name, I know. What this form does is the calculations that I just talked about, that's what this form does. It calculates the audit, since the clerk and the prosecutor and the court aren't going to know what the total amount budgeted countywide is. They're not going to know the number of employees enrolled. That's going to be known by the auditor or maybe the commissioners or an HR office, but it's not going to be known by the 4D offices. So we've created this form, which we hope will help calculate those things, those two amounts, the budgeted amount and the actual amount, for the 4D offices, make it very simple and mechanical, like I said again, for them. So just briefly to go through this, is it pretty visible up there? Yeah. It has the county name and the date submitted or the date completed up there at the top. But then you start looking at the numbers 1 through 6 on this screen. The first line is the form is filled out in December of which year. And for our example, we put 2018. And when you put a number in that block or in that box there, it fills in other numbers throughout the course of this form. And we'll talk about that when we go through it here. Number 2, is the county self-insured or fully insured? Well, if you're fully insured, you just mark fully insured and you're done with the form. Sign it and you just email it into CSB. But if you're self-insured, then you're going to need to fill out the rest of the form. Number 3 is, does the county budget health insurance costs by participant or by position? And by that we mean, is it just people enrolled in the plan, or are you budgeting based on the salary ordinance and even vacant positions you're going to budget for just in case somebody fills in? That's question number 3. So now 4, 5, and 6 is where we get into the calculation of the information. Number 4, total countywide amount budgeted for health insurance for 2019, it says. Because this form is going to be completed at the end of 18, and so it is to be used for the 40 offices to do their claims for 2019. So we're looking at the end of 18 to give them a number that they can use for next year. So that is the budgeted amount for 19 and the total number of participants or people covered by health insurance as of 12/31/18. Well, this form's being completed at the end of 18. That's the best number we've got, so that's the number we're going to use to come up with our average amount per month. And then the last number, budgeted cost per employee per month, $833. And you can see right next to it, it says used for MEC claiming in 2019. So when you complete this form, you'll deliver a copy to the clerk, prosecutor, and court, and they'll look at this and they'll see, boom, that number right there, that's what I'm using to claim. That takes away a lot of the uncertainty and the work and the back and forth that we've had in this system so far. Next slide. Oh, she did it already. The next slide talks about the transferred amount. The first slide talked about the budgeted. We also have to get the transfer to the actual amount to figure out for purposes of reconciling to the budget. So the first, number 7 there, total amount countywide transferred. Again, we used $1.5 million in this example. The second one, excess balance transferred from health insurance fund back to the county general in 2018. This is a situation where when you have a budget line item and you transfer it into health insurance fund, that's when we claim it. What you do with it in that health insurance fund, you don't have to spend it. For my purposes in Title 4D, it doesn't matter. As long as it stays in that fund, it doesn't matter to me. However, because it's already been claimed and there's no concern about it being claimed again, if that money, however, is transferred out of the health insurance fund and goes back into the general fund, then the concern is that it could be used for a Title 4D expense again, and so we have to do a reduction here. So that $1.5 million that we started out with is reduced by any amount of transfers that go back into the general fund. If there are no transfers, or they stay in that fund, or they go into a different dedicated fund, that doesn't concern me, and that wouldn't have to go on here. So the net countywide in this scenario is now $1.4 million. Number 10 is kind of important in this process. Total number of participants or positions covered as of 12/31/17. Remember, on budgeted, we look at 12/31/18, but on actual, we're looking at 12/31/17. And the reason for that is, this is an actual. We're doing this at the end of 18, and we're trying to figure out the actual for 18. But if we'd have done the form the previous year and figured out the budget for 18, that would have been done at the end of 17, and we would have used 12/31/17 for the number of people. So if you're going to compare a budget number with an actual number, and to see if you need to do a reconciliation, you have to have the same denominator there. You have to have the same number of people enrolled. And so, or else it's not apples to apples. And so, going forward, this form is going to be done at the end of 18. At the end of 19, excuse me, we're going to do this form again. You will create the actual total to use to reconcile for 19, and you'll compare that to what we did here to claim for 19, and you'll be able to tell if those numbers, again, if the budgeted number that you claimed is higher than what turns out to be the actual number, that's when they need to do a reconciliation. But if it's lower or equal, then they don't have to do one. And it'll be very simple because you'll have these two forms from 2 different years, and you'll be able to look at those numbers and see if you even have to do the reconciliation. So it's not like you have to go through a spreadsheet and do some work, and if at the end you find out, well, heck, I didn't even have to do that. Well, here, you'll know beforehand. Does that make sense? Does that seem relatively clear to everyone? Potentially? Oh, I'm sorry, I did want to go over this box at the bottom, number 12. The reason that is there is to indicate what items are included in the self-insurance budget line item. For a lot of counties, the amount of insurance that they've budgeted is just health insurance. And so if they also have life insurance that the county pays, or dental, or an HSA that the county pays, those can be claimed in addition to that amount. But there's also a lot of counties that health insurance budgeted number also includes life insurance, also includes HSA. And so we have this checkbox thing down here where you will check which ones are included in the health insurance number, so that we will know not to have those, and the county offices will know not to claim those separately in addition to the health insurance amount. Yes, ma'am.
So if it includes those, wouldn't it be every eligible full-time employee then, not just the participant? Because every eligible full-time employee gets the life insurance and you know what I mean?
Yes,
So
I do, but that became untenable to try to figure that out, and so we're just going to use, since 99% of the dollar amount is based on the number of enrolled for health insurance, that's the best we can do in that regard. I've already kind of mentioned this before, but this health insurance form will be due by December 31. As of right now, it may end up being December 15th or something by the time we get to it, but generally speaking, it's due in December of each year, and then can be submitted to the 4D offices in your county with the clerk and prosecutor, and if there's a 4D court. And also, the signed form can be scanned and emailed to us as well at the CSBQA email address here. Okay. Now, we do have an alternate method that we're not necessarily allowing to be used right now, but if there are circumstances for whatever reason might be, that the other method I just talked about doesn't work, this is something that is out there that potentially could be done, but as of right now, we're going with the other method as the method that's going to be used for Title 40 claiming. But I'll just go over it just briefly. It's using the cost allocation plan. There's some advantages to it, and that is that there's no reconciliation required, because right now the vendors are working on a 2018 or the 2017 cost plans. It's the middle of 2018. They're working on the 2017 cost plans, so you already know when the transfers occurred. You know what the total transfer amount is. So you don't need to do a reconciliation. You can just do that calculation on there, and you've got the amount. The negatives to this are that causes a delay, a significant delay in receiving health insurance reimbursements. So if you're claiming monthly, let's say through 2018, the way the cost plan works, you wouldn't start to be able to claim health insurance again until 2021. There would be a 2-year delay in the way it works, and that's a significant amount of money. After that 2-year delay, then it would be annually from there on, but that would be a significant delay. Obviously, also, your monthly expenditure claim reimbursements would go down significantly. Health insurance is a big part of the personal services number, and so that would cause a significant reduction in those as well. And the last and not least problem would be coordination. There are a lot of, in more cases than not, in many more cases than not, the vendor that does this cost allocation plan is different from whoever is doing the monthly reimbursement claims. And so we're concerned about coordination with somebody over here and the vendor saying, hey, we're going to start claiming it monthly, and these people not getting the memo and it being claimed twice in a county. So those are concerns that we have right now. So this is out there as an option, but we're not allowing it for now. It's going to be the previous method that I talked about, using the budget number with the reconciliation. But I did want to kind of run by it a little bit. Okay, on to the miscellaneous issues. That's it for health insurance. Is there any questions about that? Does that seem fairly clear? Okay. These are questions that we've run across that have been brought to our attention through the course of our FQA reviews. Information needed by 4D offices. What information do they need? And my point here is to emphasize that the information we're going to talk about it's essential that they have this information. There's no way to claim it, to do the claim, whether they have a vendor or not. There's no way to do the claim without this information at the county level. You need a ledger that shows when the expenses actually occur, and then you need a payroll report that shows the county portion of FICA, PERF, and other fringe benefits. That information is just absolutely essential. So for instance, if you're a Harris County, it would be the transaction history report and then the earnings and deduction register. If you're a Loudoun County, it would be the combined ledger all detail, and then the employee pay history, or the balance register all detail. And if you use another software, I apologize for not mentioning them, but I didn't know what their names of their stuff was, but it would be something similar to a cash ledger that shows when the transactions occur, what month they occur, the dollar amount, the date, the name of the payee, and all that sort of thing, and then the payroll reports, which show the county paid numbers. Those offices just absolutely have to have them. They can't do this work without them. So if they're requesting these documents, that's why, because there's nowhere else to get the information in the format needed under federal regs to be able to capture those costs. And also, there's other fringe benefits that sometimes are not on the payroll report, like life insurance. Rarely is life insurance one of the fringe benefits on a payroll report, so that would be information that they would need to know as well, the county paid portion per month per person. That's why they're asking for that information. The next miscellaneous issue deals with the cost allocation plan review. We've seen a number of either Board of Accounts audit findings or questions that have come to us about, hey, you need to review the cap, you need to go over the cap. Well, what does that mean? What exact level of review do you need to do to satisfy this requirement? And I've had several emails with folks at Board of Accounts, and you do not need to tie out all the numbers. That is not something that is required. You don't need to tie out the numbers back to invoices or back to wherever. If that level of information is required, they will ask the vendors for it, is what I was told. And so that is not the level of review that is required. Under federal regs, it's your grant. You're responsible for at least understanding how this works. It's not the vendor's grant, it's your grant. And so you need to know at least something about how it works and the mechanics of these cost plans. The level of review that would be satisfactory would be, for instance, sitting down with your vendor and going over, starting with, say, the allocation methods, looking at head count. Head count is an allocation method used often in the cost plan. Does head count look right? Are these the number of people that we have? Does that look reasonable? The number of transactions paid, does that look reasonable? That's information that you probably should have a reasonable handle on. The square footage in the building, that's an allocation method that's used. Does the square footage look good? Is this the amount of square footage in my spot? Look at the allocation methods, make sure they look reasonable. In addition to that, you can look at the expenses by department without going in through detail line by line. Hey, is this about the total amount the auditor spent last year? Because there's an auditor. These cost allocation plans will have a section for auditor, a section for commissioners, a section for treasurer, and whoever else is in the plan. Do those expenses look reasonable? Does that look about what was spent for treasurer? Look about what was spent for commissioners, for auditor? That's the type of review. Go over that with your vendor, look at that type of information, make sure it looks reasonable to you based on that sort of review. They also mentioned, the Board of Accounts, that a letter or a document, and they didn't really give any specific language, but simply a document stating something to the effect of, I have reviewed the cost allocation plan for 2016 on this date with my vendor, and the amounts appear to be reasonable, and to have it be signed by by you, the auditor, and by the vendor, sign and date. And that type of documentation then, with this type of review, should suffice for any findings or any issues from Board of Accounts or when we come calling and do our reviews. Now, I know there are some auditors that do review numbers a little more significantly. They do tie some things out and that sort of thing. If you want to keep doing that, that's fine. Just keep that with this document as your documentation going forward. But real detailed look, real detailed number crunching, that they're going to go to the vendors for that. And that's the end of the presentation. If you've got any questions, I'll certainly let you know. This is our contact information, mine and Lisa's, and kind of the overall email address.